everyone. Welcome to Technical Analysis webinar. We know we were supposed to hold the trade log review webinar this weekend, but due to some personal emergencies and personal affairs that's going on, as you all know, in my personal life, as well as admin age, we did not get time to prepare the trade log for this month fully just yet. So once we do that, we will share it. We will share the thread log in our usual channel. But for now, for this weekend, I feel like it's important that instead of that, we go over the technical analysis of where the market stands right now and what's going on. Seems like we are actually in a time where market could be in a crucial stage where it can mount a rally, perhaps. And a lot is going on, as you all know, with recession, inflation, the earnings that came out last week, the GDP data that came out last week. So I think it's important for us to discuss all that and unpack a little bit to see where we can go from here, especially for month of August. So let's just get right into it. Let's start with earnings. So as you all know, earnings came out last week for big tech names. There are still more earnings coming out, obviously, for next 2 weeks, and we will keep an eye on it in the room as well. But for now, the big tech has reported earnings, and as well as Tesla and all that already. Most of the earnings that came out, except Apple and Amazon, most of the earnings were either on par or underwhelming, but not as bad as they feared it would be. A lot of companies reported earnings, business slowdowns. A lot of companies announced hiring freeze. That being said, the big tech, the companies that usually make up most of the indices, as well as the most public face of stock market, like the FANG stocks plus Tesla and Microsoft, those companies are optimistic about what's coming. So if you go through their forecast for next quarter, most of that is very, very solid. Now, retail, for example, is slowing down with Walmart lowering their guidance way before earnings to temper with the expectations, which actually tanked Amazon ahead of the earnings. But when Amazon came out with their earnings, it was pretty solid. They did not report any significant slowdown in the business, and they're very, very optimistic in their forecast for outlook for the next quarter. And to be honest, almost Amazon is such a huge company. Even if their retail slows down, the other part of Amazon, like the cloud computing and all that, is going to make up for the business easily. And that part of Amazon will continue to grow as more and more companies adapt to cloud computing, because they are the biggest players that are out there. The other, like Azure and all that, are trying, but AWS is still the king. So my point is that it's so big to fail that it's probably not going to. So Amazon came out with strong, Google came out with strong earnings, Microsoft earnings was pretty much on par, but their outlook for next quarter is double-digit growth for this year. So super, super strong outlook. Apple reported their biggest quarter yet, despite inflation, despite everything that's going on in the world. It seems like people just can't get enough of Apple products. Even with their slowdown, they miss some matrix like For example, their Mac computers didn't were a little bit below the estimates and all that. But for most part, it was blockbuster. They reported their biggest quarter just yet so far, and they're despite the inflation, like I said. So that they are not slowing down. If they are doing so well in this economy and this economic condition and what's going on in this country, when things get better, and they will, they are just going to do better and better. So Apple is one of the companies that is a huge component of most of the indices. So if Apple does well, everybody is confident that economy is going to hold. Well, there are other sectors, obviously, but the tech is where every eyes. It's like I said, it's a public face of stock market. As long as that's good, nobody usually pay too close of an attention, as at least the news cycle when they are reporting it of the other sectors as much. But all in all, most of the earnings so far are better than expected, or on par, or not as bad as they thought it would be. Just for example, Netflix have 2 million subscriber loss. Instead, they came out at just under 1 million, which is still bad. The company is still dying, but they ran up big because it's not as bad as expected, right? So it's dying, but it's slowly dying. So that's bullish, apparently. Anyway, so that's a good thing. Feds continue to say that they can handle the inflation, they can still do the soft landing and all that. U.S. economy is strong. Dollar is at its strongest that it has been in a while, which shows how strong the U.S. economy is despite the inflation and recession trouble that's on the horizon. So that also gives hope. Usually, what happens when recession come is that the dollar gets weak compared to other countries. And that is a huge red flag. That is a sign of a global leading economy in trouble. But this time around, even as we are right at the doorstep of recession, dollar is not weak. It's probably the strongest right now that it has been in a while. So that's another anomaly of sort that is happening, which is also giving investors and people hope. So that's a good thing as well. GDP data came out as well last week. For 2 consecutive quarters, we reported lower GDP so that is a textbook definition of recession. So that if a country reports 2 negative GDP, 2 quarter of GDP, negative GDP in a row, that means it's in recession. Now we did that, but the other things are showing good sign. Now, is it definite? Probably not. If this continues for another quarter, then it would be bad. If dollar starts to get weak, it will be bad. If the other earnings that are coming out starts to report that despite tech sector being strong, the other sectors are having trouble and the business is slowing down, like retail is expecting it to be, there might be trouble in the future. So this is not definite position where we can say like, okay, the worst is behind us. But as of right now, it seems like we are in a much better position than we were at the end of June. So that's a good thing, right? So let's start looking at the charts. As you can see, this is a SPY chart. This is where June ended. We ended on 2. This is a daily SPY chart. After June, July, we went up, came back down to test the lows again, and then we started moving up pretty much last 2 weeks. We've been doing pretty good. Now, we in the room, TRADEORE, we were a little bit skeptical of this rally, and it's justified because we have seen this before, only to tank down multiple times. So there is nothing wrong with being a little bit more conservative with the position that we take and how aggressive we choose to be. There is a time and place to do that. When market is in limbo, when market is in the condition that it is right now, it's better to be conservative and aim for a smaller profit rather than go all out and be aggressive with it. If you guys remember, we were doing the same when market was rolling off here, because as long as it was over 200-day SMA here, we were like, okay, we have to be careful with the puts position because this is the area where market could bounce in. And it tried several times. But once it started rolling over, and we knew for a fact since probably about April or so that, okay, now this is it, then we started being more and more aggressive with our puts position. The same way, we need to wait for a definite signal before we start being aggressive with the calls position. But that does not mean that we can't trade or we have to wait for the perfect setup or perfect entry. You have to play to win, right? So it's always the case, and you have to take the risk, but it's on you to decide how much risk you want to take. So anyway, so this is the SPY chart. We have been discussing about the secondary trend line. As you can see, tried to break it here, failed. And then it tried like about 3-4 days, and then finally last week it ran up big for 3 days in a row after the big tech reported good earnings. Now we are in a good position. We broke out of this trend line. So, and on Friday for a brief moment, we are over, or actually we closed right over 100-day SMA, which is a good bullish sign. 50-day SMA started to flatten out here. 200 days still lower, 100 days still lower, but we are in a good position. So going next week, what we want to see, and another thing I want to point out is this RSI chart on yearly daily chart. This is the area where we enter in overbought. Last time it happened here after this 2-week rally at the end of March, and then we saw a huge sell-off. Before that, probably that area was here. It didn't even touch the 70 mark, but we still sold off from there. Before that, it was here. We crossed that area. It went super overbought, and then we pulled back. And that has happened multiple times here, as you can see. Again, it sold off a little bit, pulled back a little bit, went up again, pulled back a little bit, went up again, almost there, and then pulled back as well. So that is something you need to keep an eye on. Not saying that we will sell off here, but a pullback could be on the card going into next couple of weeks. So be careful with your position. Like I said, quick trades are the way to go. 15, 20. If you can do 20 to 30% in a trade over and over again, 3 position and you're 100% up. Or 25% and 4 position and you're 100% up on your investment. So 25 to 30% is nothing to laugh at. Focus on consistency. That's where you want to be. So let's just say you take 10 trades, and out of those 10 trades, 5 trades are losing trades and 5 trades are winning trades. Now for the 5 winning trades, you are consistently aiming for about 30%, 25 to 30%, right? And for the 5 losing trade, you will keep it in close and pretty much take the stop loss as 10 to 15%. Now, I am being very, 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 very conservative given given the how volatile market is. That is not ideal, but I'm doing that because to show that even if you win only 50% of your position, you can still get away with making profit. Even if you aim for 30%, you just have to be more conservative with your stop losses. So try it. If it fails, get out. Try again. Try it. If it fails, 10, 50%, get out. Try again. That's what you need to do rather than holding on. Now, what you want to aim for is not 50% success rate. What you want to aim for is 80 to 90% success rate. So if you win 80% of the positions, let's just say every single position is 80%, then your total, every single position is 30% profit. So for 8 position, it's about 240% profit. Yeah. 240% profit. So the next 2 position, you take 50% loss on those position, each position, because your stop loss hit. You will lose out of those 240% gain, you will lose about 100%, and you still end up with 140% gain overall for that 10% position. Even let's just say you do instead of 50%, you put your stop loss at 50% or 70%. You still end up with close to 100% gain on your overall position because you were consistently winning 8 out of 10 position and going for 25 to 30% gain. So the other 2 position, if your stop losses are at 60 to 70%, at the end of the day, you still come out winning. And you can only do this if you focus on 2 things: consistently taking profit and getting out 25 to 30%, keeping the position size safe. So if your winning position, let's just say, is $2,000 position and you make 25 to 30% on that, but if you the losing position, it's $5,000 losing positions and you put 50% stop loss, then it's not going to work out. So this example works only if you keep the position size universal, like throughout it. One way to do that, and that I have been doing for a while, is on Monday and Tuesday, I go for 180 to 100% position size. So let's take an example. My account is $10,000. Then every single position I take on Monday and Tuesday is $800 to $1,000 position. So win or lose, it works out. And then going into Wednesday, Thursday, I lower that position size to about 50%. So I would take about $500 position on Tuesday and Thursday. And on Friday for lottos, I lowered down even more to about 20% position size, so $200. So because lottos, as we know, are risky, so and very, very volatile. So if it works, I make 100% gain. It's like $200. Good. If I lose, I take about $100, $140, $150 loss. That's fine too. It's not that big of a loss. It's if I compare that to my Monday and Tuesday position, it's about 15% of my overall position. So not that big of a deal. And that's what you want to aim for. That is very, very important. You need to keep your position size in check, aim for consistency, and aim for consistently taking profit. Anyway, sorry for being going a little bit on a tangent on there, but it's a very important topic given the market condition right now. Anyway, back to SPY. We are right at the 100-day SMA. So strong resistance, as you can see in this area of 415, 416. The top of the range and where it can make another run on the upside would be at 418. So going into next week, 415 and 418 are the absolute level that you want to watch. Over that, the next one is all the way to 423. Over that, 425. and over that it will be 427. So those are the level you want to watch on the upside. This is the long-term trend that you can see right here. So that will be the next one to watch for us. If it moves over this one, then it's the definite change in direction, and we can start being more and more aggressive with our call position. And we would definitely have left the bear market behind us at that point. 200-day SMA is also sitting at 433, another strong resistance level. I personally think that we will see another pullback before we get to that point. But would we test low of the lows again? At least I don't think so, at least not for next couple of weeks at least, unless the other sector reports very, very bad earnings or something, some terrible news comes out. As of right now, everything seems stable. QQQ representing tech sector is doing quite well as well. So it is also sitting right over 100-day SMA. So that's a good thing for the tech sector. And like I said, tech sector has been reporting very strong earnings, so it is in the good place right now, but a lot of resistance for that as well on the upside. The next one being at 320, 324, 329, and 334. And then near 200-day SMA would be around 342 on the upside. On the downside, if it starts to pull back, 309, 305, 300, and then 295 would be absolute line in the sand. Break below that, we will be low. We will be below 100-day SMA, 50-day SMA once again, and may test this trend line right here. So keep that in mind. Another thing that you may want to notice here is this is the secondary uptrending trend line that we are making, which is very steep. So if the pullback does come, this may be the first line of defense for bulls to hold this trend line. If it fails, then we can go back to the 50-day SMA again. So keep that in mind. Amazon reported stellar earnings. Made a huge high, but pretty much closed pretty much where it started, about negative 0.005. So break even, that's a candle that tells us that the direction is undecided. Neither bulls nor bear won on that day, and it could go in either direction in the next week. What I would hope for it to do, or what I would like for it, what I would like to see on next week is for it to pull back down to about 429, 430 level, and then start to bounce back again using this 100-day SMA as a support level. That would be the ideal condition. Break below this 100-day SMA, and we can see it go back down to 126, 124, and then 120. So keep eye on those two levels. I don't think it would go lower than that. That's a huge drop for Amazon in a week, but this 100-day SMA support at 129.75, I would say I would just round it up to 130, is a strong support level. If it breaks below that, be careful, but that could be the support level where it can pull back, do this gap fill, and then start to bounce again. So watch that closely. Over this level of 136, I would say pretty much, it can start to bounce again. So the next level on top of that would be right here at 37.65, which is where it failed about 3 times on Friday. So once it moves over this 137.65 level, it can go higher. So please keep in mind that level, very, very strong resistance level. And I think we saw that right here as well, where it continues to bounce for quite some time. Right there. So let's keep an eye on that level and see where it goes. If it breaks above that, then there is pretty much no resistance level until 140, 125 from earlier. So that would be the next level for us to watch, and then 145 obviously on the upside. Now that $10 is pretty much about $200 jump for Amazon in a week, possible. That's when it will run into resistance at 200-day SMA. So 100-day SMA support on the downside, 200-day on the upside, very, very important. Now, Google is lacking right now. It's pretty much moving sideways. What we want to see for Google is for it to move over this 100-day SMA. I think it's due for some times, but if you could notice something, this is Google's pattern, right? And this is something that you can only see if you have been trading Google for quite some times, and you notice, because I noticed it because I have been trading it for years. Now, let's take a look back. Let's go all the way to, since you guys know March 2020 sell-off, let's go there, right? So not fully, do I highlight? Okay, I'm not fully familiar with this thing yet, but let's see. Look at this sideways move, right? Now let's do that again. Going to delete this. Why is it doing that? Anyway, yeah, let's not waste too much time on it. Let's try this again. Oh, I see, I see. Oh, cool. As you can see, because the range was so small back then, yeah, it's a little bit hard to see it, but you get the point, that I'm trying to make. This has been Google's pattern for quite some time, and at least since 2020, as you can see, what it does, it moves sideways and then goes up, moves sideways, and then pretty much goes up and then pulls back a little bit, and then another sideways move here, another sideways move here, and then goes up, another consolidation sideways, and then once it breaks out, it moves higher, another consolidation sideways. This time it moves lower, so it pulls back, and then continue to move up. Now, similar move, as you can see, did happen here. Right here and this. And move sideways, pull back down. And now what it is doing is it's pretty much moving sideways again. Now the range this time though is quite significant compared to where it was before. But keep in mind that this was pre-split, so it was a little bit difficult for it to move $100, $200. It's a little bit easier for it to move after the split. But and how it also indicates how volatile the market has been. But the point I'm trying to make here is that Google does this again and again and again. It moves sideways, tests support and resistance over and over again, until it breaks out one way or the other. Now last few times, it has broken down on the downside. As you can see here, again, this is another one right here. Downside, and then it broke up again downside. Though now, if it breaks this time, we can see it move back to the range right here at 142. That would be the range to watch. So now what I want you to do for going into next week is keep an eye on this 120 level, which is 100-day SMA. If it moves over that, it will be officially out of this sideways range, and it can start to go up again towards 131, where it will find this 200-day SMA range. And that could be where it starts to come back, test this upper range again, and then continue to move up. If it breaks on the downside, then the downside level you want to watch is this 105. If it breaks below that line, then 102 and then 199 can also come. Google, unlike Amazon, hasn't been making that strong of a move or uptrend just yet, but that could change if it managed to get out of this sideways range. So keep an eye on that. Top. Moving sideways as well, the range you want to watch on the upside is this 40, 40, 50, 40, 60 range, I would say. So just keep an eye on that one. This is the range for it. And it's very useful to realize and see this range and establish this range, because it gives you a unique opportunity to pretty much buy and sell with high confidence. So if you are an equity, buy at 30, sell at 40. Again and again, and again. Let's just say you moved this first two times, but when it came here, you could have bought it. You could have sold it at the top of the range at 39, came back down, you could buy it again, sell some again at 37, 38, 39, whatever, pull back again, or let's just say you didn't sell it, it came back again, held it again, you can add more, sell again at 40, wait for it to come back down, and then rinse and repeat and rinse and repeat. You can do it. I've done this one and I've done this one. I've done traded shop twice recently. So it's a very and you can do the same thing with say options as well. But the options is that we have the expiration date. So let's just say this time when it went up, it took about 4 days to go up. Before that, it took about 6 or 7 days to go up, right? So it's uncertain like how long it will take. So even though it's moving up, you may lose on the option side. So if a stock is cheap enough, like 34 bucks, do the equity, it's fine. But yeah, until it breaks out of this range, it's hard to do. I would turn bullish and stop if it managed to break over this 100-day SMA. Apple, strong uptrend. We drew this trend line during our last technical analysis. Pretty much it's intact. It pulled back last week almost to the trend line, and then it continued to move up after the earnings. Now the level you want to watch on the upside is 165, and then 167.50, and then 170. Pullback at Apple, already over 200-day SMA. 50-day SMA is curling higher. 100-day SMA is pretty much flattened out. 200-day SMA is also curling slightly higher. Super bullish positions. We talked about this last time. Apple is a name that you don't want to bet against. So any pullback, I will be looking to buy calls in Apples. It's the sure short way of making money again and again and again. You just need to do is the risk management. So keep an eye on it for the bullish shot. I would not bet against it. But also you need to keep in mind this RSI is approaching overbought area, same as here. So I wouldn't be surprised if we see a little bit of pullback again to this trend line, and that is where you would want to enter on the upside as long as it's holding this trend line. Netflix finally broke out of this range right here over 205, and now it's facing resistance at 230. That is where it has failed twice already. 50-day SMA is curling higher. We are in overbought area, so I wouldn't be surprised if we see a little bit pullback. 100-day SMA is still lower. 200 days SMA is still lower. So Netflix, all in all, is still weak. What do you want to watch? That all could change if it managed to get over this 248, 250 area, I would say. What I want to watch Netflix do is pull back again down to about 210, 205 area, and that is where I would start looking to get into it again. I am interested in Netflix again, mainly because it has established a range now, and I can read more and more into it, and that is what I want to see. Anyway, so yeah, so let's see where Netflix goes. Meta, again, I'm not super interested, not doing much, so I'm just going to avoid it for now. NVIDIA, strong start. We are forming a uptrend right here, as you can see. I hope you do. 50-day SMA is curling out, 100-day SMA is still lower. 200 days pretty flat. If it pulls back to this level right here at 168, 170 area, might not be a bad area for us to get in on the upside. For the upside, the level you want to watch is like right here at 185, 184, 185 area is where you want to watch it for an explosive move on the upside towards 193. Which is where it will run into 100-day SMA resistance, break over that, it can move higher. These levels are very, very important, so please write that down or draw it on your chart. It will help you make decisions regarding where you want to get in and where you want to get out. Snap, avoided. Twilio, not on the option size. CrowdStrike is an interesting name. It has been 50-day SMA is moving up. 100-day SMA is providing strong resistance here, and 200-day SMA is at 201. So let's take a deeper look into it. When we talked about last time, we said that the crowd has been very strong. But now if you notice, it's still strong. But it is moving in this range right here, as you can see. Boom. And boom, this range. And it is sandwiched right between the 100-day, 50-day and 100-day SMA. It tried to poke its head out a couple of times, but it failed. So what you want to do here is you want to wait for it to come back down to about 170-ish range and then enter in it for the upside move. We have traded it a couple of times last week with significant profit. But it's very tricky because it's thinly traded, especially on the option side. So you cannot enter at the whim in it. You cannot just buy with the market order or something like that. You have to plan for it, and then you have to enter in it at a certain price that you want with the limit order. If it takes it, it takes it. Things like that, and then you have to be very, very quick about getting out of it as well. So, but it pays very, very well. It moves very, very quickly. So for this one, on the top side, what you want to watch is 186 level, and then 190.50, 194, and then 200 on the upside. That is where it has failed before multiple times in 195 range. So if it managed to get over 200, it will run into resistance at the 200-day SMAs to one. Well, yeah, it's like 200-day SMAs at 201 level. If it managed to get over that, then that is where it will start to go higher. It moves fast, so a lot of opportunity to make a lot of money. So keep an eye on it. It should be on your watch list. Roku fell big time. Not very interested in it. Docu, not very interested in it. Twitter, not very interested in it. It is at 44, so it is finally recovering from the Musk drama, and that is what it wants to do. It just wants to move under the radar and not worry too much about anything else. This is another highly volatile name, as we all know, and that is Tesla. And it is in uptrend right now, very, very strong uptrend. So let's see what happens. It made a huge move on Friday. Last 3 days, it has been moving up after testing this trend line at 170. Instead of breaking it, which we bet on and failed, it just took off. And this is very, very apparent, but now it's getting into overbought area right here. It's sitting right over 100-day SMA, significantly over 100-day SMA, almost touching 200-day. If it manages to get over 912, then we can see it exploded over to 943, 980, and then $1,000 very, very easily. Lots of resistance for it. Ideal for that for Tesla would be to pull back, test this lows again near 843 and this trend line, and then take off. And that would be ideal for us, so we can get in and take advantage of the rally. But keep an eye on those levels. On the downside now, 875, 860 would be the level to watch for us, and then 844. Those will be the level to watch. The strong support should be at 825 from the 100-day SMA. 50-day SMA is crawling back up, which is a good sign. But again, like I said, RSI is super, super, super high. So be careful with it on the upside. Wait for it to pull back down a little bit. Microsoft, another strong name. Once it's tested 8250, it just took off 40 points in 4 days pretty much, which is a very strong sign of bullish sentiment. It also break over this resistance area at 270 and then again at 276. Now the next resistance for it is going to be right here at 289, which is where it failed multiple times before. So keep that level in mind. Support on the downside is going to be 275, and then if it breaks below that 100-day level, then 270, 263, and then 50-day SMA right here below that 260. I highly doubt that it could get there unless the whole market tanked. But overall sentiment right now for Microsoft is bullish, so you want to play calls in it. What are the names? Cost, another monster moved over. This is a very bullish sign right here. Upside cross of 200-day and 100-day SMA. So cost should be on high on your list. This resistance level for cost is going to be right here at 246 now. Break over that, we can see it go towards right here, 264, 564, 550 would be the next level on the upside. Very, very strong. People, when the groceries and all that stuff starts to get expensive, more and more people will start to look for budget shopping, and that's where Costco comes in place, because you buy in bulk, you save a lot of money, and most people would want to do that. So usually in recession time, companies are like Costco shine because they are providing consumer a way to save money. So keep that in mind. Ideally, and as you can see, Costco is also in a strong uptrend as well. So I am very bullish on Costco. I would be looking to play this on every pullback towards this trend line. Break below that, I would just ignore it. I wouldn't play puts in it. Ideally, all you want to do is play calls in Costco. I would be very, very surprised if it pulls back down to 525 level again. That would be a great opportunity for us to enter in it. But yeah, going into next week, I am keeping Costco high on my watch list. And I think those are the names that I wanted to talk about personally. If there is any other names that you need chart for or something, please feel free to drop a line and request a chart for it, and I will go ahead and post it as soon as possible. We personally like to trade this name, but it doesn't mean that you have to trade this name as well. The only reason we trade this name is because we like this name and we have been trading it for years, and that is the main reason we like to do it. So please be careful, and if there is another name that you like to trade, that you have been trading or wanting to trade, just request the chart and we'll be more than happy to post it as soon as possible. And that's it for me. Thank you so much for watching this video. Let's have a fantastic month next month and kill it. All right. Have a good day, guys.